Morning guys. Okay, so very quiet session as the markets pretty much tread water, waiting for tonight's inflation numbers from the US. UK bonds ticked up a little higher but closed unchanged, as we can see here on the daily. Similarly, the US 10-year bonds also off a little bit, but inside bar, not much, doing much at all. Very quiet, as you can see here on the hourly. German bonds also similar sort of trajectory or path as the UK. Looking into commodities, also very quiet, not much. Oil off a little bit, but wheat off, but otherwise not much happening in commodities either. And when we go and have a look at stocks, we've got US stocks a little weaker, but again not much really happening, to be honest. And you look at the global picture, it's all the same. There's the Nasdaq not doing much, Aussie pretty quiet, FTSE off a little bit, creating a bit of a double bottom there. DAX not doing much, China closing unchanged. VIX also still relatively high, waiting for some action. Euro stocks and Nikkei also very quiet, so very subdued session compared to previous ones. US dollar unchanged, Aussie dollar unchanged, euro unchanged, pound up a little bit. Yen's broken through, a bit more yen weakness, which is I guess the only surprise at the moment, but it's all about what's going to happen tonight with this inflation number. Is the month on month going to tick higher? Here it suggests it is, but the year on year is going to tick lower. That was previously 8.2, is now dropping down to 8.1. So to me, if it's 8% or underneath, then you're going to see US dollar weakness, and you're going to see stocks increase. So US dollar down, safe haven assets down, and risk assets up, as they expect inflation's now under control. Even though it's still at 8%, it's under control, and the interest rates that they have been putting in place are having an effect on inflation, and that's quite possible. But we're still at 8%, so whilst the market will take the immediate view that interest rates will have peaked and that the next move will probably be down, that's the looking through the mess and out the other side. That's what stocks will do. But in reality, you're even at 8%, and interest rates will still be rising. So the other side of the coin is if it's if this comes in at say 0.4 and pushes the annual inflation at sort of 8.4%, maybe even 8.3% or higher, you're going to see the opposite of this, right? You're going to see US dollar dominate again as interest rates continue to increase, safe haven assets continue to increase. General bonds globally will increase, or bond yields globally will increase, and stocks will melt due to the global recession that will be happening. So that's tonight, 10:30. Trade accordingly, or stay out of the market, and we'll chat tomorrow and see what the fallout is. Cheers.